All right. Morning, everyone. Let's get going here. All right. Last night's session in the States was a bit of a non-event. Again, we continue to have these kind of drifts to the right, which what's really quite impressive is that seems to be on a daily basis. We see the lows of the S&P made in the first hour and a half of the day, every single day. I think it's for about 6 or 7 sessions in a row. Just quite spectacular. Seeing the same sort of pattern. I think it's market. The market wants a correction, or I shouldn't say the market wants a correction. Traders are looking for a correction, so they're shorting the market early, only to kind of be proven wrong as the day starts to move out through and they start to cover. But there's nobody who really is willing to significantly add at these sort of levels. So we kind of get this low volume drift out to the right from there. So that's my synopsis of what we continue to see in the same sort of pattern that we've seen on a daily basis over the last little bit. If we look into the Asian session this morning, mixed action again. Nikkei up a little over 1% as we speak. We have the Australian market down again, Kospi down, and Shanghai and the Hang Seng relatively flat. The big thing that we continue to see. We did see some rally in the mining stocks yesterday. Some strength straight from the beginning of the day here locally and in London, and that came on the back of a really poor day the session before out of Australia. So I don't know if that's something to pay attention to. We did have Fortescue, which traded up nicely there today. But other than that, I mean, I think Australia is really starting to suffer a lot because of the whole iron ore price crash, I would say, or just all the commodity prices that are really falling hard. I think that's really starting to have an impact there. You're starting to see some pressure on some of the banks and things like that in Australia on the back of that, but not a whole lot of leadership necessarily in Asia this morning. We do have some numbers out here this morning, which I think are very important. That's going to be SAB Miller's first half numbers coming out. Expectations, headline earnings per share, we're expected to see 127. That's in dollars, 13.82 billion in revenue, and divvy per share at 27 US cents. So wait for that today. I'm not sure when that's going to come out. Then we've got AccuCap Properties as well right at the opening bell. And then later in the States, we've got Walmart. Sorry, we skipped the charts of interest here. Let's get back to the charts of interest. The rise of the dollar. This is the big thing that we've had happen in the markets lately, and it's quite spectacular that it hasn't had more of a negative impact, I guess I would say, in certain areas of the market than others. I mean, you have seen the negative impact in the commodities baskets, but you would really think that it'd have more of a negative impact in this maybe on South Africa, for instance, or some of the other emerging markets, and the equities. You haven't seen it. You've seen it in the currencies, but you just haven't seen it in the equity side. Well, and you can see there the U.S. dollar trade-weighted exchange rate in U.S. dollars has just gone up and peaking at its highs. I mean, when you look at what's happened to the yen, that's why quite obviously the Nikkei has been going up, seems like, every single day. And then you can obviously see the gold price in dollars. So the yen and the gold price really kind of moving hand in hand at the moment. And I think this is kind of really signaling that we should continue to see the interest rates rising in the States. And what's quite interesting is that markets have been kind of happiest with interest rates rising, and equity markets have been struggling the most as U.S. interest rates have been falling as of late, which is quite spectacular and very contradictory to what you would think. Anyway, let's get on to market data. Today we had Japanese PPI numbers, which came in a little bit soft. We had machine orders, which were much better than expected. Industrial production better than expected. We had Chinese industrial production, which was a touch soft, coming in line with all the Chinese data we've been seeing. We've got German CPI right at the opening bell. And then we've got initial jobless claims, Bloomberg Consumer Comfort, and the monthly budget statement all out in the States tonight. Okay, let's get into the maps. All right, the first thing that I want to have a look at this morning is the Aussie. Sorry, let me retype that. Okay, So there's quite a significant level in the Aussie. I know there's that one long green bar there that kind of throws it out, but remember that it closed up above this level, which was where I think the level is. Um, I've drawn that really poor, but let's go have a look at it here because you can see it nicely here on the 30 minute. That level is at about 45 520 if I'm not mistaken. Show me the chart. Show me the chart. There we go. And you can see that's kind of where we've been topping out in the last handful of sessions, right at that resistance level. And you could see on the 1 year that it's really at what I consider a very important resistance level. This morning we've opened up. Well, not as high as that. It's at I call it 45,525 or 530. And this morning, I fully expect us to get up and test it. We're only about 70 points away. If we get up above that, then I think the market can really go. We've definitely been range bound, to say the least, as of the last few sessions, and I think that we're going to see a nice breakout from here over the next session or two. All right, the next one that we'll have a look at is Naspers. I wanted to have a look at this one simply because the earnings out of Tencent came out yesterday. Definitely a little bit soft, but not hugely soft. We dropped back below this 1400 level, which is quite a crucial level. But we bounced up off the close. What I think is interesting to note this morning is that Tencent is actually up again. It's up right now. It's up 0.75% in Hong Kong, which is definitely going to put Naspers up significantly this morning. I think it can open up above $1,400. I think it should open up above $1,400, and I think it should actually probably be trading even higher than that if Tencent can kind of maintain this sort of price premium. So just be careful out there. This thing could easily snap back above 1400, and these little false breaks like that of support and can tend to be some of the biggest, where you get some of the biggest moves out of. So the market's actually not going to take those earnings so negatively. Then I think easily we could pop above, the recent highs and come back up and test the all-time highs. So that could be a big outlier this morning. Watch that one closely. All right, Standard Bank. I wanted to show this because let's just quickly have a look at look at FirstRand. This thing's ridiculous, taking out all-time highs again in a continuation. We can look at ABSA. ABSA also, it's literally about to rip through to new all-time highs. And then you look at Standard Bank, who's really lagging badly. And what you can see here is it looks to me like we've got a little bit of a potential inverse head and shoulder setting up here. It's not... the neckline's not totally flat, but I think the setup is potentially there. And I think if we get above, call it 138, 139 level, this thing could, I wouldn't be surprised if it comes back and freaking tests all-time highs. It's lagging the other banks hugely. And to me, the formation is somewhat there. So I think maybe buying some Standard Bank here on a bit of a, lag play might not be a bad idea. All right, next one we'll look at is CFR. If you look at this thing on a 30-minute, since that big break higher we had about 4 or 5 sessions ago, we really have just been consolidating in a bit of a descending triangle pattern here. 96 has been the absolute low, and I think it's gotten there every day except for yesterday, or it even got very close to that yesterday as well. So we keep bottoming out here at 96. I think we just need to get a little reversal above about 97, and this thing could start to make a bit of a run back up to the 100 level. So watch that closely. If we get above 97 in CFR, I think it can go. All right, the next one we'll look at is Sasol. And Sasol didn't trade well in the States last night, continued to be under pressure with the commodities basket. 540 here. This is also a bit of an ugly head and shoulder pattern, but you can see what I'm talking about here is sort of neckline here and the general shape. But bottom line is 540 is very significant here on the 30-minute. This drops. I don't see any reason why we don't come down and at least test the recent lows. And I really think we might be able to get fully to that 520 target, which on the 1 year, let's look at the 2 year. Maybe it's on the 2 year. Is where we kind of thought that we might be able to get down to, right around there, right around 520. I think that was the target from the height of this breakdown, which we never fully got to. We got to 528. So if we do break down here, I don't see any reason, if we get below 540 today, I don't see any reason why we can't come all the way down and finally test 520, which I think is a full retracement and the full target for what we were looking for before. Just need to drop, like we said, that 540 level there. Right. And then the last one I'm going to show this morning has earnings. That's SAB. SAB also got a little bit of a head and shoulder thing going on here. Either way, yesterday it did drop what I would consider as an important level there at 525 as of yesterday. So not exactly beautifully clean, and doesn't have a huge target to the downside. Maybe only about $12 a downside below 525, which doesn't, it only takes us down to maybe 615. But bottom line is, call it 613. Bottom line is that I think a little bit of a negative pattern here setting up. It could be interesting today as well going ahead to earnings. So just watch that one closely today. That's it for today, guys. Thanks a lot.